Welcome Pure Investors, I'm Nick and this is your January update for the Pure Income and Growth Fund. We're pleased to report that the fund delivered flat performance in January, despite the Small Ords Industrials Accumulation Index declining approximately 10%. We're also pleased to declare a 1.75 cent per unit distribution for the second quarter, an increase from the first quarter's distribution of 1 cent flat. In December's video, we noted that a decline in warrant and equity values can only have a limited impact on fund performance due to its 30% cap as a proportion of NAV. We saw this benefit in January, where the fund outperformed the market by approximately 10%. Were further material market sell-offs to occur from here, we continue to feel that the fund is relatively insulated, with warrants and equity comprising only 16% of the NAV, and the remainder predominantly secured credit and cash. Further, we note the choppy market environment creates fertile hunting ground for transactions, as executive teams grow increasingly unhappy with their cost of equity. All told, with all credit positions continuing to perform well, and no companies currently in or expected to breach default covenants, we are cautiously optimistic about the fund's prospects as volatility grips the market. Now moving on to stock specifics. This month held numerous quarterly updates for our portfolio companies, with average second quarter revenue growth of 83% year on year across the portfolio. Whilst there are too many individual results to discuss here, we wanted to call out the results of two previously COVID-affected companies that are now trading very strongly. The first, Mighty Craft, stock code MCL, is a craft beer and spirits accelerator which, deriving a third of its revenue from on-premises sales, was severely impacted by COVID lockdowns. Now most of the way through the lockdowns, the company delivered a very solid 179% growth in second quarter cash receipts to $18 million and delivered a maiden quarterly profit. With the tailwinds of a hugely successful launch for its Woolworths exclusive Better Beer brand and $11 million in cash at hand, we view our $13.5 million funding facility with MCL as very secure, and our at-the-money warrants as well placed to turn a healthy profit in the coming 12 months. Secondly, we would like to draw investors' attention to DXN, the modular data center company. DXN's execution on its sales pipe was hampered by COVID, with high-value project quotes difficult to close over Zoom and impossible to implement in lockdown. Now largely through, DXN reported a record $6.2 million in cash receipts for the second quarter, growth of 214% year on year. The company also recently announced a $3.5 million deal with Multiplex, the first of what we hope will be many such chunkier contracts now that the company has clear air to execute. With positive operating cash flow of $1.9 million for the quarter and net debt of only $1 million, we're optimistic about DXN's prospects for a re-rating in its equity price as it continues to convert on its sales pipe. Lastly, we're excited to announce a new position in Sitesoft, an OH&S SaaS provider with strong growth into over 2,800 customers across the world, including Apple, Disney, Sony, and Viacom, just to name a handful. You can read more about Sitesoft and our new facility in this month's newsletter. Thanks for listening, and we'll see you again next month.